After the Brexit vote, I think it's fair to say that people will now be turning their attention on political matters to how the US election is going to go. We didn't predict Brexit correctly, and I think it would be foolish of us to try and put all of our portfolio bets onto the outcome either way, whether it's Hillary Clinton or Donald Trump. It's important for us to have a diversified portfolio. One of the things that we see happening, regardless of who is elected as president, is that the US yield curve will start to normalize. That is to say, longer-term rates will start to rise relative to short-term rates. The US has now been operating effectively a zero interest rate policy for several years, and we can see signs that the economy is moving on to a sustainable footing. So in managing our portfolio, we like to find tailwinds that will help stocks that we like enjoy the benefits of improving fundamentals. We prefer JP Morgan as one of the banks to invest in from amongst the many we can choose from, and I want to contrast the metrics of JP Morgan with that of the Australian bank Commonwealth Bank. Banks' financials are notoriously very difficult to predict in terms of their profits. Very large asset bases, very large liability or deposit bases mean that small movements in either of them can create big swings in the profit and loss account. JP Morgan is a bank that trades on a prospective PE of about 11 times and compares favourably with the Commonwealth Bank, which trades on a PE, as far as we can tell, on about a 13 times multiple. On a price-to-book basis, JP Morgan trades a little above book value, where the Commonwealth Bank trades nearer 2 times its book value. The important thing to distinguish between them is that the Commonwealth Bank has remained very focused upon the Australian mortgage market and very much focused upon Australia, whereas JP Morgan is much more diverse and involves itself in global finance, trading, proprietary trading, credit card issuance, and of course investment management. This isn't always a good thing. Investor sentiment can swing for and against the use of bank trading profits and for and against a focused strategy as opposed to a diversified strategy. But given the tailwind provided by improving interest rate fundamentals and an expansion of the net interest margin, we can see a much more favourable outlook at a much lower valuation for JP Morgan than we can for the Australian banks. JP Morgan has treated shareholders fairly well in the last few years. It's raised its dividend by about 25% per annum on average over the last cycle. And although the dividend yield at about 3% is significantly lower than the dividend yield of the Commonwealth Bank, we think the growth in dividend yield, the strong capital position of JP Morgan and its diversified business base will make that a better investment as a global financial than investing in the Australian banking system. Thanks very much. Next time we speak, it'll be on the other aspect of the US economy we think is going to change, and that is the investment in the infrastructure of the US that is very necessary and extremely overdue. Thank you.